Hello! Welcome back to Scale to Exit. Today is just going to be another solo episode, and we are going to talk about align yourself with your type of exit. So, typically in this podcast, we talk a lot about strategic financial exits, but for the purpose of this episode, I want to shed some light, bring you some awareness on other exit strategies that it's not like employee stock or anything like that. It does include some of that, but there's other exit strategies that you can employ and walk away from the day-to-day operations. So before we dive into the episode, I want to welcome everybody that's new. Welcome, 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 and everybody that continues to show up to the Scale to Exit platform. I'm so excited for you to be here again with me one more week. Definitely, thank you so much for continue to stop by. And yeah, it's because of you that we have this podcast. This podcast is being created as a platform to help founders, business owners really build a business that can be sellable or exitable in the future. So today episode is going to be a little bit different. We are going to not focus on the strategic and financial exit only. We're going to look at the business very objectively, and we're going to see that there are other types of walking away from the business, and it gives you the freedom that you so deserve. Okay, so thank you for coming by, and please don't forget to share, like, comment, share with your friends, your colleagues, your business partners, and go ahead and comment, subscribe. It would really mean a lot to me and my team. So, okay, first of all, number one thing that you really want to do is really get really honest and clear on what you mean by an exit. Now, an exit doesn't really mean, like I said, selling it to a third party or going IPO. It could mean different things, and the underlying cause for an exit could determine or identify the type of exit you want to go for. So, for example, if you're having health problems, that will identify the kind of exit you will probably would want to go for, because at the moment that you're having health problems, you probably don't want to spend a lot of time in your business improving the operations or the financial side of things, sales, to sell it to someone. If you are having health problems, you can probably think about maybe stepping away by hiring someone else to take over from you. Maybe could be giving it away to a family member, maybe doing a management buyout where your management team takes over of the operations of the business. It really depends, right, on the underlying cost. If you want to retire and you said, okay, I've been working on this business for so many years, I'm ready to retire, then maybe that's when you would think about getting an exit, like a strategic or a financial exit, because those are the ones that you would get more return on your hard work investment, which is your business. And in that case, then maybe you want to prepare the business and spend a little bit more time getting the operations scalable and lean, making sure it's transferable, making sure that sales are consistent and persistent and showing traction, making sure that you're getting your revenue, hitting your revenue goals, that you have systems in place that allow you to predict revenue and cash flow. So that's when you retire. Now, if, for example, the market is doing its thing and now is the time to exit your business, to like actually sell it, go for IPO, then you gotta do that, right? That's when, if you're saying, okay, this is my time, I'm already at a moment in my life that I've worked in this business and I think I'm ready for my next chapter, and the market is where it needs to be, it's favorable for me to have the exit that I so want, then that's when you prepare this financially or strategically exit. If you, for example, are less risky, don't like too much risking any transaction, you live a very risk aversion kind of life, then you may want to think about a recapitalization kind of exit. So in this kind of exit, you basically sell about 50% of your business to a group. It could be a private equity group. And that's, you still have some stake in the game, but you're not 100% running it. So recapitalization will give you that freedom. If, for example, your business is not profitable and you're going through a hard time, if that's the cost for you to go for an exit, basically you can do a liquidation. And that one really just depends if you have also another opportunity that you want to focus on, if the accountants that you're working with, CPAs, are actually identifying that there could be some goodwill in that transaction. So liquidation is another form of an exit. If you're just really tired of going through the day-to-day operations, then you might want to consider hiring a COO or a CEO. Maybe if you hired a COO, a chief operating officer, then you're able to walk away from the day-to-day operations and still be part of the vision and the strategic decision making for the company, but not really running the day-to-day. Believe it or not, that's another kind of exit, because you're not in the day-to-day operations, but you're not really reaping the benefits of really going out there, going for a strategic or financial exit. Again, the same way is like if you absolutely want to step away completely from the business and just become a co-share person, or be in the board, or then at this point, then you're basically giving away the reins of your business, but you're still not reaping the benefits that would mean about really exiting a business. So yeah, if you have health problems, like I said, a few of those can be really useful. It could be like the liquidation, the transfer to your family, the management buyout. If you're bored and you're trying to move on to the next thing, you can liquidate your business, or maybe find somebody that can give you some kind of monetary value for what you hold in your business. And once you identify the cost that's gonna really bleed into what the exit is gonna look like, then you have to figure out your number. I do believe I have another podcast episode that talks about your number. So your number is basically what you want to exit as, and what your company is valued at on the current market conditions that we have going on. So there's lots of different kinds of valuations that exist out there. Depending on where you are in the business, if you are a brick and mortar and you have about $2 million in revenue, your valuations probably is going to be the seller's discretionary earnings. And if you do have some assets, then it's probably going to be as well the asset valuation. So it really depends on how your business is and where it lands in terms of revenue and EBITDA, to really identify what your multiple would be at that moment. But a very important thing here to really take notice is identifying your number, not just the company's valuation, but really your freedom number. What is the number that will give you the life, or it will advance you to the next stage or chapter that you're preparing for? So if that, for example, is 5 million, but your business is right now that's $500,000 and is valued at 1 or 2, then you want to consider that you're probably going to sell about 70% of that. So it's going to bring, if it's 2, it's probably going to bring about 1.3, something like that, 1.3, something like that, into cash value. And that's not really 5, right? So that's a big spread between your number that you need to consider versus the valuation of the business. So another scenario here is like if you want to retire and you say that in order to live comfortably for the next 25 years, you want to have at least $100,000 per year once you retire. So if you are going to be living for the next 25 years at $100,000, how is that going to look like? So you multiply that 100,000 times 25 is really 2.5 million. So that's how much you're going to need from that transaction. And if you don't have investments out there, you have to factor all that in as well. If you have outside investments, if you have money on the market, if you have real estate investments, right? So all of those things get factored into what you need in order to be able to make 2.5 million for the next 25 years? What if you live more than 25 years? So you, right? Like, what if you live 30 years? Sometimes that's the case. So you have to prepare for those scenarios as well. One thing I want you to not overlook as well is all the costs that come in like selling your business. So like, for example, if your business is going to sell for $5 million, don't think you're going to get $5 million. You have to pay the middle person. I'm going to call the middle person the brokers the transaction, which is typically like 8-10%. So take that out. You're going to pay some legal fees, take that out. So you have to factor in all of those percentages out of the money that you are going to be selling. Then after that, you're going to have to decide what role you're going to play in your company in the future. Are you going to be coming in as a consultant? Are you planning to become as an advisor? Are you planning to be on the board? Do you want to stay on board for a period of time while the company takes off and there is this integration? The integration happens successfully, the post-merger integration. So you gotta get it very clear with what you want to be your next role to be within that transaction. Once you're also selling your business, you have to also take note that one of the things that may influence is how the payment is gonna take place. It's not like you're gonna wake up one day and you're gonna see $5 million in your bank account. No. So you could negotiate and think about it also in terms of taxes. Do you want to be taxed? Do you want this amount to be on your bank account all at once and get taxed all at once? Or do you want to split it in payments and kind of get paid periodically on that transaction? The other option is also be part of the post-merger integration, which basically means that you will get a certain amount of money up front or in payments, whatever works best. And then you're going to get the remaining amount attached to milestones. So if you stay in on board and you hit certain revenue goals or certain traction goals, or make sure that the team stays aligned, then that rest of the money will be paid according to how many milestones you hit for a certain period of time. The other option that you have is also come in as a consultant, which would mean, again, they give you upfront money, whatever amount it is, and then you negotiate a consulting contract for a certain period of time. The one that I really, really like, especially if you, for example, sell your business to not to another company, but they ask you, but you don't get a lot of money on that transaction, right? So what happens is that, for example, they give you the 5 million, but they say what you will hold. So it's kind of like a recapitalization. You will hold shares on the company that is acquiring your business. So you're selling your business, they give you 5 million, and then you hold shares on the company that is buying your business. So this one is really cool because what happens is that if this company gets sold, it's probably a more valuable company, you will get a bigger return on your exit at the moment of that transaction. Even though it's a little bit phased out, you will get still your cash up front, but in time, once the other company gets acquired or goes for another transaction, then you can get more money for those shares. So that one's actually really cool, and I've seen it played out in many different in many different scenarios when the exits are not as big, they're smaller, and then they roll into the parent one. Okay, so now that you know the steps on how to identify what kind of exit, why you're exiting, what kind of exit is fitted, and what is the afterlife of your exit, I want you to go ahead and take note. Go ahead and grab a piece of paper and a pen, and I want you to really write these categories: sell to a strategic buyer, sell, strategic buyer or financial buyer, recapitalize the company, management buyout, transfer to family or kids, liquidate your assets, or really become a chairman, or hire a CEO or a COO. Out of all those ways of exiting your business, I want you to rate them from 1 to 5. Which one is the one that makes sense for you right now? And then write why. Right? Is it a health problem? Is it a bankruptcy problem, or is it because you're so bored and you're just ready to flip the switch and go to something else? Um, is it because you are retired and you're tired of running the business? Think about your why and choose your exit. And then from then, I want you to write down all of the ways that you can go after that transaction, right? And what will be your role in that company? Would it be that you're coming in as a consultant? Would it be that you're still coming in maybe as an employee of the other company, of the parent company? Maybe you're staying on board. Would it be, how are you getting your payment? Are you getting your payment all at once? Are you getting your payment periodically? Go ahead and write those down, and that way you can have a better understanding of what exit you want for your business, and that will you know just give you more understanding that not every exit is strategic or financial exit. You do have more options, and if you see it this way and you start thinking about it this way, then you can probably be more proactive in your planning. Remember to also calculate your valuation and what your freedom number looks like. If your freedom number looks like 2.5, but your business is probably worth 500, then start understanding that what other assets do you have outside of your business that can bridge you there. And if you don't have those assets, then you need to really consider that you need to bring the value up of your business to meet you there. So for all of that, bringing value of the business, valuation, understanding your freedom number, you can always contact me and my team and my very strong support network, where if I don't know something, other people will probably know the answer, and we can probably help you navigate one of the biggest parts of your life, which is transactioning out of a business. It's one of the most emotional ones, and it's one of the most impactful ones that you probably any human being will go through. So I think I got my notes done. I hope that this episode was helpful for you, and I will see you till next time. Adios, muchachos. Hasta la vista. Bye.